China and developed markets, mainly the US and EU, look increasingly divergent on their cyclical growth and macro policy trajectories. On the growth front, the Chinese economy is on the path of recovery after the COVID-19 lockdown shock in the second quarter of this year. Private consumption and investment are starting to recover from a very low base. Despite the disappointing GDP growth for the second quarter, June macro data generally accelerated from the prior month. Public sector demand is also expected to accelerate, bolstered by the government's aggressive push for infrastructure investments and proactive provision of funding. We think the government's pledge to meet this year's social and economic targets means relentless support to boost growth. We expect developed economies, however, are likely to see more cyclical growth slow down in the coming quarters. Forward-looking leading indicators have been disappointing to the downside, while consumer confidence has been weakening faster than anticipated. Europe is in a less favorable position, directly hit by the shock stemming from Russia's invasion of Ukraine. On the policy front, China and the developed markets are also at two opposing phases. The lack of consumer inflation allows the Chinese authorities to turn proactive in fiscal and monetary stimulus to support a recovery in the second half of 2022. Thanks to the resilience of domestic and external demand in 2021, China can deploy the safe fiscal policy rooms to stimulate growth in this difficult year. Regulatory control over the property market, internet companies, and COVID-19 are also expected to be eased further to provide greater support to growth. The US and EU, however, have their hands tied on the policy front due to rising inflationary pressures. They are set to pursue austerity measures on both the fiscal and monetary policy fronts to rein in domestic demand.
Allianz Global Investors.